So it's a great pleasure for me to welcome back an old friend of mine and of Euromoney's and a visitor to this stage a number of times, someone who is known, I'm sure, to many of you, Hisham Arab, who is the Chairman and Managing Director of CIB. Those of you who are here in the GCC forum that we ran here in December last year in this very room will remember the fantastic and entertaining interview we had between Hisham and Tim Collins, and I sort of sat in the corner and did the crossword while they riffed off each other. Unfortunately, we couldn't have Tim, but we have Hisham. One of the things that we talked about, well, haven't actually talked about, the ministers and Keiko haven't talked about this morning, is the banking sector. I personally believe that when the history of this transition period is written, one of the main things that will come out of it is how the banking sector was, to coin a very overused phrase, resilient in the face of everything. Why do you think that this was?
Simply, we're very lucky to start the banking reforms back in 04, late 03, early 04. So when you enter 2011, banks were standing in a very solid ground, either asset quality, loan loss coverage to non-performing loans, and the liquidity ratios. So you go into a very tough political times for 3 years, and the banking sector proven with no doubt that's not only resilient, but making more money and making more investments. Most of the banks expanded their network, hired more people, invested in technology and infrastructure, preparing themselves for the coming era, which we know very soon financial inclusion will be on top of the agenda, and banks need to be prepared in terms of digital delivery channels. So banking sector in Egypt, where I would say in a nutshell was very lucky. The people that change was not only change on the balance sheet and bricks and stones, but change in people as well. All the new management that entered the banking sector were people with very solid background, coming from multinational banks or groomed inside their banks, technically strong. So that's where we stood January 11.
But I mean, I remember our 2009 conference, so it was about just under a year after Lehman. So let's not even get into the political period, the political instability and the transition here. But I mean, let's not forget there was a small banking crisis globally. Egypt's banks didn't really miss a trick on that. I mean, and part of the reason was because they weren't exposed internationally. They weren't using a lot of exotic instruments, and that enabled them to dodge a bullet. Do you still feel that Egypt's banking sector, I don't mean over-regulated, but is perhaps a little constrained as to what it can do? If there was more of a light touch regulatory system, it might be able to move things forward quicker?
Well, I think the banking sector is working as a partner with the central bank, with the regulator. Based on that, we try always to understand we operate in Egypt. Okay. And keep in mind that even with the increase in number of banking accounts for people to subscribe on the Suez Canal CDs, maybe have gone up by 800 or 1 million individuals. Yet we are less than 12 million bank accounts, what we have, in a country that have 52 million voters. So the financial inclusion part has a potential, which is you can quadruple the number of clients we have today. The whole point here is that the potential in the local market keeps bank focusing on the local market. So you don't have a saturated consumer banking market. You don't have saturated corporate credit. Corporates are rich. You look at the corporate leverage. Corporate Egypt is again rich, and this is why corporate Egypt managed to survive through the last 3 years as well. So what I'm trying to tell you is that the potential in our local market is too big for us to divert the focus to other markets. In the country, you see people coming from other markets into Egypt because they can see the same potential that we saw.
Mm-hmm. One of the risk areas that credit rating agencies and analysts always talk about when they look at Egyptian banks is the quantity of Egyptian government securities on, I have to ask this question, on all banks' balance sheet. It's not specific to CIB. I'm trying to phrase this in the right sort of way.
But to make the long story short, I told one of the agencies a few months ago, listen, if it makes you happy to take the cash deposits and take it home and keep it there, I'm going to do that. But practically, let's look at reality. The reality is that over the last 3 years, corporate Egypt demand for credit was extremely anemic, if not practically zero in terms of growth.
Yes.
And in spite of this situation, the loan growth or the loan portfolio of the banking sector did not go down. Usually, if loan growth of the loan demand is zero, the portfolio will go down, either medium-term loans or working capital.
Yeah, understandable.
So deposits are growing by closer to 200 billion pounds a year on average over the last 3 years. And that addressed another issue concerning the Suez Canal, will it impact the liquidity in the banking sector is very tiny part of the annual growth. Deposits are growing, you want the financial inclusion, and lending opportunities are low. Where do you go with the money? I have to invest that money. So don't judge the banking sector with the current era. You have to look at what the banking sector can do over the coming several years. Mind you that, and the public don't understand this, we make more money dealing with corporates than government. It's not the yield you take from the government bonds or the government bills. The multi-products you do with your corporate customer, from the simple payroll to the commercial activities in terms of trade finance or letter of guarantees and credit, the total return of the customer is definitely way higher than what you make on the treasury bills.
So, I mean, if you then get into a situation where, which we all hope happens, in that corporate investment, corporate business restarts, both domestic or purely Egyptian players, but also internationals, is that then going to mean that from a banking point of view, you say, well, we're going to use some of our funding to go to these corporates, and there'll be less available for the government?
Well, the more corporate activity, the more tax will be paid, the less government borrowing will be, the more reforms you're going to do about energies and subsidies, the less budget deficit you will have, the less borrowing they will have. And practically, deposits are growing every year. So yet, I cannot say that the government is competing on the balance sheet of the banks with the private sector.
Well, this is the crowd, they use the word crowding out. I mean, it's not, but you don't see that?
I don't see that.
Okay. Okay, so...
Yet.
Okay, yet. So we keep looking at that, keep our eyes on it, and when you have, 90% of your assets are government securities.
No, it's not 90.
I know it is, but when it gets to that level, then we start worrying about it.
I don't think we're going to get there.
No, I don't think so either. But, okay, now, banks are often, I think, unfairly criticized for, not being engines of growth. Forgetting, of course, that the money that you lend is not your money. You're not an investment company, you're a bank. One of the things we haven't touched on today, but is a subtext for everything, is SMEs, is all of this. You've talked about financial inclusion. Yes, there are people out there who don't have bank accounts and should do, but there's an awful lot of people out there who banks don't really want particularly as customers. They're not particularly creditworthy. They don't have any assets. Without finding ways to be inclusive to a much wider group of the population, and therefore changing the way that banks do business, how do you play a positive role in the growth of the country?
At the board of the federation, we talk about those issues. Okay, one of them is the financial inclusion and the transaction cost. Egypt is part of the world, and whatever happens in the world happens in Egypt. I would strongly recommend that people look at the Kenya model, although there are drawbacks on the Kenya model of the financial inclusion and mobile banking, because the mobile companies are the banks, not the banks that are really clear. They are supporting the mobile companies, but the model here and the law in Egypt is different. I think over the coming few years, you will see more and more clients being bank customers without going to the branch. Maybe for the KYC requirements the first time, but later on, they will use the other electronic tools. I'm not talking about sophisticated customers who will use the internet banking. I'm talking about people who use the simple mobile. Okay? Talking about the small and medium size, separate between a small and medium. We had a meeting about a week ago with some international agencies and investors, and we said if you want to play a role in Egypt, you need to help the medium-sized companies with equity. Financing is there. The challenge that most of the medium-sized companies have is coming up with equity. Most of them don't realize that, especially if you're in the industrial sector, you need always to retain reserve fund for replacing and upgrading with the modern technology in order to sell your product. For the small businesses, I would strongly recommend for the people to read about what's happening in the UK. UK small businesses, same like Egypt, don't like to deal with banks, although banks are cheaper in terms of financing than their off-takers and their suppliers, but they use banks only for transactional banking.
Yeah. You touched on it a couple of times, and it's a theme that, interestingly, is in every event that we do that touches on banking. But there's this whole business, and you said in Kenya, the mobile phone companies are the banks. Do you, as a banker, arguably the leading sort of private sector banker in Egypt, do you worry that the banking model completely is changing, and that you're seeing the entrance of non-bank financial institutions, technology companies, telecoms companies, other types of institutions like the post office, that are going to come in and grab these young, relatively underbanked people? And how do you respond to that challenge as a traditional institution?
Well, you will die if you think the world will not change. Okay, if you have to change with the change, you have to partner with those players. This is the way things will develop. Otherwise, if you say this is the world, how the world will go, will remain static, eventually you will disappear from the arena.
But how would a partnership work? Say, I mean, I use the word. I mean, I'm not saying that there's any partnership or anything's happening, but you look at Google, for example, or PayPal, or any of these people. How would you think about partnering with a technology company? What would you be doing? What would they be doing?
Think about what MasterCard and Visa are doing now with Apple. Okay, this very much, they are not resisting but cooperating. Each one has a role to play. Neither Apple can be the MasterCard and the banks, nor MasterCard and Visa can be the Apple and the banks.
Mm-hmm. So it's finding those areas of cooperation. But do you think that that technologically led model is relevant to a country like Egypt?
Absolutely. When you have a country with more than 100% penetration rate on mobile, we should not ask that question. It's coming.
Let's close out by looking at a policy side of things, or
I don't talk on politics.
Not policy. I didn't say policy. I said policy, not politics. Okay, they're related. But you've said to me, and you're also on record as saying that one of the things that Egypt could look at is creating something, I would give it a name, but it could be called all sorts of different things, a National Economic Council. So, for the last sort of 5 minutes of our discussion, let's focus on that. Now, I had to do some research, which is a terrible burden, so I hope you appreciate the fact that I actually did do some research, and come out that there are a number of different models. There's the sort of, the one like the US, which is that they have a National Economic Council that is the same as the National Security Council without the spying, I imagine. But it's a government thing, inside the government, populated with government people, that periodically touches on the private sector. And then you have other models where it's a very much of a private sector thing that is advising. How do you see a National Economic Council working in Egypt? Who should be part of it? Where should it sit? Is it a presidential or prime minister, or how would it work?
You need to pick the best of each model in the world. Malaysia has one, Indonesia has one, Japan, after the Second World War, had one.
Yep. Bangladesh,
Germany,
Nigeria has one.
Yeah. The way that issue was raised more than 10 years ago. That you cannot have a country with the size of Egypt that doesn't have an economic DNA, mainstream. Okay, what's your economic identity? You don't need to change your economic identity with the change of cabinet or the president. It has to be something that each one come and serve that mainstream. And who should be on it should be independent, and you keep changing people all the time. But first, you need to kick it off and decide on your identity, economic DNA. And later on, it should support the government. Each government that can practically pull One of the worst things that we see in Egypt, that every time you change a minister, he scrap everything that was done before and start from...
It's not only in Egypt.
From ground zero. You wanna stop this, let him build on what was built before.
Yeah.
Let him build on what was built before. If you have that ministry, you come to implement, you can measure the performance of the technocrats in the government by how fast and how efficient you are implementing the policy, which is the mainstream and the DNA of the country.
But I'm still trying to get an idea of your...
It has to be independent.
Does it have, I mean, would you be on it?
Not as an implement.
Yeah.
Everyone in the country should serve it, okay, as advisory role, a year to go. But what I mean is you have to separate, you have to differentiate between the administration, employees, and the board there, and the council itself that does the...
And would it come up with policy recommendations, or would it come up with strategic recommendations, or is it purely a sort of...
The first round is the most difficult round, because the first round has to decide the mainstream of the country. Okay, so maybe we're talking the same thing but in different languages.
Yeah.
Okay, there is a lot of noise in people's mind about free market and private sector. Till today, people do not understand what's private sector. Businessman. Businessman is a bad word. You need to define those things on the right way, put the right definition, and put the mainstream for the country that the majority of the country agree on.
But do you think, I mean, you look at Egypt's economy now, and you know, let's project a positive future for it. One of the great strengths of this country is the fact that it has a diversified economy. It isn't a mono producer. Yeah. And that's great in many ways. But it also means it's quite difficult to describe what the economic DNA of the country is.
What I mean, the economic DNA, you cannot, for an era, you were an open economy before 52, then at a point of time you nationalized everything, then you came to an open economy, unregularized the market, then you try to regularize the market. You don't really, you don't have an identity to say, are you a socialist country, capitalist country, socialist, capitalist? What?
Yeah.
At least you want to say where this country will be in 100 years' time, 50 years' time.
Let me give you two examples of what I mean. I may not be explaining it.
And by the way, this is what the current president and the government is trying to do now. Is putting they know very well they will not be there in 50 years, okay? But they want to say in 2050 where the country will be. You need to institutionalize that way of thinking into something that will remain for many years to come.
Quickly, let's take China. Post Deng Xiaoping, you've got, basically you can summarize China with manufacturing for export, number one. Low-cost manufacturing for export. Now we're seeing rebalancing towards domestic consumption with a side order of infrastructure to keep things going. So, a couple of sentences, you can basically say...
Those are tactical, not strategic.
Okay. So the strategic should be what?
The mainstream, the identity of the country, and then this is the role of the council, tactically, how you reach your destination.
The identity of the country defined as how would you, do you find, you don't turn it in a tactical thing, you say we are, is it like saying Germany, high-tech manufacturing with social democracy?
Where do you want to position yourself in 50 years' time compared with your...
Okay, well, where do you think we should position Egypt in 50 years?
Egypt is not less than the top 20, the G20, and should be start with a target saying, I want to be in the G20, part of the G20.
Okay. 50 years' time. Yeah. So the
Not 50 years' time.
The Euromoney Conference 2050.
No, in 2020 you can.
2020? Well, we might still be here. We might get taken to task with this.
Well, we'll be on retirement.
We consider the OIC, well, if it had been us, if we'd been there, it would have happened. Anyway, I hope it does. Hisham, thank you very, very much. It's wonderful to have you here again. I know I have a feeling we'll do this again, maybe not in 2020, but it's always fun. I wish we had more time, Hisham. Thank you very, very much.
Thank you so much. Thank you, Rich.